I'm Charlotte McLeod with investingnews.com, and here today with me is Andy Schectman, president of Miles Franklin. Thank you so much for joining me.
Good to see you again, Charlotte. It's been a few months.
It has been a few months.
Happy to be back.
Yeah, nice to see you in person again. It is really nice when we get to talk together. Where I want to start. So we're here at the Rural Symposium. We're in Florida, very nice and hot here. One of the big topics that's been coming up is this BRICS meeting. We've got that coming up in August, and there's been so much discussion about what's going on there. Are we going to see a new BRICS currency? Is it going to possibly be backed by gold? These are themes you've been talking about for years now. And I'm hoping that you can help us understand facts versus fiction as we're approaching this event.
Totally. No, it's really a weird feeling, Charlotte. I've been doing this for 32 years, and I've talked about a lot of things, many of which have come true only because they're based and rooted in mathematics and economics, sprinkling a logic upon it. But when you use that as your base for trying to figure things out, typically it comes true, but never when you think. The mathematics, the economics, the logic play out over time, never how we think, never when we think. But starting in late 2019 and over 1,200 YouTube videos I've done, the acceleration of this BRICS phenomenon has really kind of blown me away. It's the first time in my career that I talked about something before anyone, and it has accelerated to the point where everyone's talking about it now. The August 22nd meeting in Johannesburg is something that James Rickard, who is here, has talked about a lot. He has either the insight or the courage to say something I haven't, and that is to name a date. Now, the fact that it's going to be commodity or gold-backed is something I believe very, very sincerely that it will happen. May not be announced August 22nd. There's been a little bit of pushback against that. One of the Russian finance ministers told us months ago that this would be the case. If we go back to 2019, we see gold reclassified as a Tier 1 asset. We see the central banks have purchased more over the last 18 months than ever. I think it is moving in that direction. But what I took from what Jim had to say in the article that he sent out to over 1 million people regarding this meeting is less about the imminent gold backing declaration and more so about the SCO and the Eurasian Economic Union. So let me elaborate. If you Google how many countries have signed up for the BRICS, what you'll find typically is 41. But when you count them, you get 25. Where are these other countries coming from? What James has said is something I've been talking about for a long time, but didn't really put it together, and that is that I've mentioned in most of the presentations I've given about the Shanghai Cooperation Organization, about the Eurasian Economic Union. You know, Saudi Arabia joined the Shanghai Cooperation Organization recently, and they are the largest regional military and financial institution on the planet, or group on the planet. They represent 60% of the Eurasian landmass and 40% of human population in and of themselves. And I always would mention them because many of the countries that are in the Shanghai Cooperation Organization and that are in the Eurasian Economic Union are members of the BRICS or the Belt Road Initiative. All of these things have had a very symbiotic relationship, and I've realized that and talked about it. What Jim is saying is that they're going to join, and if you count the countries in the Eurasian Economic Union and the Shanghai Cooperation Organization that haven't already applied to BRICS, you get damn near 41 when you add them to the 25. And so what that means is if you combine the Shanghai Cooperation Organization, the Eurasian Economic Union, the BRICS, and the Belt Road Initiative, to which the largest infrastructure project in human history, and that pathway has every single OPEC country on it. And you put all these countries together and all of these groups together, you're talking pretty darn close to 90% of human population. This is significant. And, you know, there's also been a lot of talk about the difference between reserve and settlement currency. And I agree, this will be a settlement currency to begin with. But when you have 80 or 90% of the world, including Saudi Arabia and all the OPEC countries in this group, when they look back at the West and say, well, they're going green. They've told us they signed executive orders by 2030 and 2050. They want to be nearly completely green. What do we need them for? And when you have this mass of humanity that are settling transactions in oil and in all forms of energy, and Brazil and China now settling deals in yuan, you have a massive reduction in demand to settle in the dollar. And that synthetic demand for settling in the dollar and the petrodollar is what has really given the dollar its hegemony. And as we continue to crack away at that demand for settlement, it starts to really undermine the reserve status of the dollar. And Jim is keen to point out the difference between a reserve and a settlement currency is typically a bond market. If you go back to World War I, you'll find a rallying cry. Buy war bonds is what they said. They built the bond market in the United States largely out of patriotism to support the war effort. You start to see things undermine here and really gain steam there. James says it will be very easy to issue a bond market in a commodity-backed currency and using a form of patriotism to undermine the Western hegemony for the first time ever as the rallying cry. The bond market will come later. So I guess what I would really like to say about that is regardless of the BRICS announcing their gold backing August 22nd, I think it's a foregone conclusion. I don't think the world will change overnight, August 22nd, but it is the beginning of some substantial changes. There's a term that I like to use called logarithmic decay, and it's little by little by little by little, then all at once. It's kind of like a waterfall, and that's what's happening not only with our dollar, with economics, but also socially inside this country, with the application of law, with cancel culture, with all of these things, transgenderism, all of these things that are now mainstream. And I don't think in particular this is lost on our foes. And when you realize that the other side of the coin is faith and credit, what backs the dollar? Faith and credit. Well, we're broke. We're 32 trillion in debt and 125 trillion in unfunded liabilities in Medicare and Medicaid and Social Security and government military pensions with 5 trillion in assets. So we're broke, we're insolvent, well, that credit's not so good. And in terms of faith, when you look at what's going on with the Justice Department, the FBI, and all the questions surrounding is the law and the justice being applied equally, I think people around the world are starting to question even the faith of the U.S. And these things, little by little by little by little, then all at once start to take effect. So, put it all together, August 22nd is the beginning of a major change in the world. It will begin a change where a massive and growing conglomerate of countries pushing back against the Western hegemony, realize that this is their shot, and to do it right is something that I think they're doing. They're very methodical in laying this out. So I think it's a big deal, very big deal.
Right, and I think maybe that's a good way to explain it as the beginning. Maybe people are looking at it as the end game, but no, that's just the start. So a lot of topics that we want to go back to, in particular the dollar. But before we go there, I want to ask a little bit more about this BRICS currency, whether it's backed by gold or commodities. I wondered if you could explain what it means to be backed in that way, because people might not be familiar with that. I believe you made maybe yesterday in your presentation a distinction. It doesn't mean it's redeemable. Right. So what exactly does?
Well, I think President de Gaulle from France proved that redeemable currencies convert. That's Gresham's law. Good money chases out bad. I don't think it will be redeemable for the average person. I think it will be denoted on a blockchain. The immutability and the veracity of it will be denoted on a blockchain. And if they do it right and use auditing by third-party auditors to show what is there, it is a step in the right direction. If it is redeemable, it will only be redeemable for the governments, I believe, who are using it as a settlement currency. Not like it was prior to 1933 in this country, where you could walk into a bank and exchange a $20 gold certificate for a $20 gold coin. What it will provide, I believe, is a form of trust and a form of transparency. And if done properly with blockchain, with auditing, with independent auditing, you have a chance to really, I think, issue a currency that will challenge the dollar, will be trusted without the redeemability for the average person. I think it'll be more for the institutions and the banks and the countries that would have the ability to do that.
Okay, I think that is helpful in understanding that. So going over into some different themes, and we'll come back to the BRICS, I'm sure, during this conversation. But I also want to make sure to ask you about this new FedNow system that's just recently been announced. So can you explain what it is and the potential impact? Because I think this is important to the topics we're discussing.
FedNow is kind of the, I think, kind of the appetizer into the central bank digital currency. It is Zelle or Venmo on steroids. It's really what it is. Instant settlement. And it's, I think, in some respects, incredibly convenient. And, for a lot of people, they will like it. It has some issues. I've read a lot about the fact that they haven't figured out what to do with people who have or will experience fraud, that they haven't even crossed that bridge yet. If once it's sent, you can't pull it back. And if there's fraud involved, what do you do? Who do you talk to? So there are still some things, but from a precious metals dealer standpoint, someone calls and says, I want to place a $100,000 order on a Sunday night, and I just FedNow'd you, and bang, it's in your account. That's great. I can understand the utility of it. I can understand how it would be great for businesses and whatnot. But I do believe it is meant to get people comfortable with the idea of electronic currency and electronic payments. And when you look at the number 2 person in charge at the White House in terms of economic advisory, it's Lael Brainerd, and she is a modern monetary theorist. She is the point person for FedNow. She spent time at the Fed, she spent time at the Treasury, and she's also one of the people who is in contact and working closely with MIT for the new central bank digital currency, which the BIS, who reclassified gold as a Tier 1 asset in 2019, has also said that by 2025, every single country in the BIS network must have an operational CBDC. And last I looked, it was all of the countries that comprise up to 95% of global GDP have one in development. So it's coming. This is, I believe, to get people comfortable with it. And, you talk about the reduction of privacy. You talk about all of the things that go along with the convenience and the speed at which money will transfer. And you have to wonder, is the convenience worth that potential massive loss of privacy, which you will never, ever get back? But it's here, and this is the beginning of a new system, probably ultimately that leads to a cashless system.
Yeah, I've been hearing about the FedNow system as this slippery slope, right, toward CBDCs. And, talking just now, you mentioned that there's going to be a requirement that all of these countries have a CBDC. Do you think there is going to then be a requirement that people actually use it? Like you're talking about, people might accept it because of the convenience.
I could see corporations like Microsoft, and Bill Gates is heavily into. He's got all sorts of patents on. Nomi Prince did a wonderful presentation talking about all of these companies that have, Microsoft in particular, and all the patents that they have surrounding the digital payments, around the 2020 enhanced ID, all the digital applications, putting your bank information, your health information, all of it tied to one ID. And I mean, I think it's coming. So a company like Microsoft may say to their employees, listen, we want to keep you as an employee, but we are now paying everyone in FedNow. If you don't want to take it, we can't employ you anymore. I could see things like that happening where employers mandate it because it's frictionless, it's probably much less expensive, it's quick. I could see things like that happening where you're almost forced to accept it from your employer, or for people you want to do business with. At first, it will not be like that. Probably there'll be a period of, well, I'm not sure about it, but what do you do if you work for a big corporation who says you must take FedNow? That's how we're going to pay everyone, or else. So it will be accepted little by little by little, then all at once. And I think it, much like many of the things that were new at first that now everyone uses. I mean, I remember starting this company before the internet and email, and I remember saying, who the heck would ever use email or text messages? Why not just call? And now you can see everything becomes accepted over time. And while it may not come out, immediately with mass acceptance, I have a feeling that it will move in that direction. And that's, I think, part of the plan. So, I think ultimately it is and will be a pretty big deal.
Okay, and to be clear, so new BRICS currency, not a CBDC.
Correct. Well, maybe. I mean, yes, I guess you could call it a central bank, but it's not a central bank because it's a conglomerate. It will act like a central bank digital currency. All of these countries will have their own CBDC. In fact, the Chinese and I think they did it with United Arab Emirates and one other Asian country, maybe Singapore. That one escapes me, but they developed something called Project M Bridge, as in money, which allows the seamless transfer of central bank digital currencies, sidestepping the SWIFT system. So yes, each and every country will have their own CBDC, but it will be transferable into the BRICS digital currency. And so I guess it's not right to call it a CBDC since it's not a central bank, but it will be a digital currency that will be very close to a central bank digital currency, just more of a co-op type of central bank digital currency.
Okay, that helps to make that distinction. And so in our previous conversation, we talked about the dollar, and you told us the dollar is in trouble. And I wondered if you could spell out what you mean by that, because I come across so many different views on what's actually going to happen to the dollar in this scenario, ranging from, well, it will decline in prominence all the way to this is the death of the dollar approaching us. So where do you fall on this?
Well, I think it ultimately, you could argue it's the beginning of the death of the dollar. I think it will fall in prominence. Look, last year the dollar share of reserves fell at a rate 10 times faster than what it had been falling previously. It's accelerating. The dollar is not going to die overnight, but when you have the majority of human population trading in another currency for settlement, for all sorts of things related to energy, it is a very big punch to the gut. Let me take a step back and say one of the things that I have done or talked about really that is different than what everyone else is talking about, and they're ignoring, I think, the biggest piece of the puzzle, and that is Saudi Arabia. In 1974, we agreed to protect the Saudi kingdom, and for that, Saudi Arabia and by extension OPEC would denominate oil globally in dollars. And Charlotte, every country on the planet's had to own dollars since 1974 to buy oil. That created a synthetic demand. When you see Saudi Arabia join the Belt Road Initiative and all the OPEC countries on Belt Road, join the BRICS, join the Shanghai Cooperation Organization, join the New Development Bank, tell everyone in Davos they're open to taking new currencies, signing a military protection agreement with Russia. When they join the Shanghai Cooperation Organization, remember, it's the largest regional military and financial group in the world. It's the Chinese army. You're being protected by two of the three largest nuclear arsenals in the world and the majority of human population. And what happens when Saudi Arabia looks at the world and says, listen, you guys have told us, you signed executive orders, you're going green. We respect that. We appreciate what you've done for us by protecting us for the last 50 years. But we've decided to move in a different direction and to associate with the majority of human population who is not going green. And so we have decided to open up oil sales in other currencies, or maybe it will be the new BRICS settlement currency only, or maybe it's the yuan, which is immediately convertible into gold on the Shanghai Gold Exchange. Not exactly sure how it immediately plays out, but the point is this. If every country on the planet who has had to accumulate dollars for 50 years no longer needs to do that, as they begin to sell dollars, and those dollars come home, creating massive levels of inflation here, a tsunami of it if everyone starts to dump at once. It's really a seminal moment. What is being ignored in all of this is the role of Saudi Arabia, and I think it is the biggest piece of the puzzle. Do they cut the dollar tie to oil? And I believe they will. I really, truly, if you look at what they are doing, all of the relationships they're making, all of the unions they are becoming part of, it's just a natural progression that they, once everything is in place, and the rest of the OPEC countries who are all on the Belt Road will say, hey, thanks for the memories, we're going to now go a different way. And bang, everyone starts to dump dollars. This is when the dollar share as a reserve and a settlement currency really comes under fire. So how does it play out? I guess only time will tell. These what-if questions are impossible to answer, but what I would say, it's the first real legitimate challenger to the dollar, maybe in our lifetimes for sure. And what Jim was saying today is that they will peg each BRIC currency, each BRIC dollar to an ounce of gold. That's what he's saying. So right now, a BRIC currency would be $1,970. And what he was saying is they don't even need to do anything to let the U.S. destroy themselves, because if the U.S. tries to accumulate a bunch of gold to protect themselves from this, gold price goes up, the dollar price goes down, it strengthens their BRICS currency just automatically. They're betting that the U.S. dollar will not hold up against gold because, look, on top of a $32 trillion debt, we have all of this in unfunded liabilities that equal $155 trillion. And how do you pay for that? You either inflate or you default. They're betting that gold will outperform the dollar over time, which will only raise the value of the BRICS currency in relation to the dollar. It's a deal that over time, whether it be slow or accelerated by some sort of event, you could argue it is the beginning, and I don't know if we say the end of the dollar, but it is the beginning of some very serious challenges and changes for the dollar and the dollar system, and really the style, I think, of life that we've all grown accustomed to in this country as the singular world reserve currency. I think things are changing in that respect.
All right, and thank you for laying that out. I think I have to ask, is there anything that throws this narrative off track? You've watched it progressing and progressing slowly but surely. Is there anything that takes us in a different direction?
Well, interestingly enough, last time I saw you was in Vancouver, and right around that time, the International Monetary Fund came out with a report that shocked me, and it was titled something to the extent of "Gold as an International Reserve, a barbarous relic no more, ? In other words, they are legitimizing gold as its role as money. Fast forward just a month or less ago, Christina, I forgot her name, Christina Georgieva, the head of the IMF, Georgilina, something like that. She came out and said central bank digital currencies that are not backed by something are just another fiat currency. So how would we change things? Perhaps we back a Western currency, whether it be through the IMF or through a new dollar, back it by gold. It might really start to change things. In other words, I think the moral of the story is you have to have something backing a currency in order to give it legitimacy if we are going in that direction. Now, the debate would be, do you need to experience a reset first in order to do that because of the mountain of debt? Some people would say yes, and some people would say that what is happening with Saudi Arabia, what is happening with BRICS will ultimately lead to a reset. And paint that picture for you and say if everyone all of a sudden globally dumps dollars because OPEC isn't taking them anymore, the massive influx of dollars creating massive amounts of inflation, which pops interest rates to the moon by the market, and all of a sudden stocks, bonds, and real estate collapse. Now, could that result in a reset or pretty darn close to it? Maybe. Point of it is that I think if you have options of a commodity-backed currency that inspires trust, and that's really the challenge of the BRICS, is to inspire trust, to find a way to show that what they are saying is legitimate. Like, for example, there's not one player controlling the BRICS. Their presidency rotates every year amongst the countries. They want to have equal say, not one country running the show. If they find a way to establish trust, transparency, immutability, veracity, and backed by commodity, it is a serious threat to the dollar. And in order for them to really challenge, I think the West would have to do the same thing. Issue a CBDC backed by gold, the only other tier one asset. Now, I have no reason to believe that's going to happen, other than to say you hear some rumblings by the IMF, and when the head of the IMF comes out and says, hey, if it's not backed by something, it's fiat, well, maybe indeed that is what they're thinking as well. But short of that, why would anyone buy hold a currency that is being inflated away, that is arguably losing its trust in terms of the way they conduct themselves internationally by weaponizing the dollar and sanctioning, and inside the country with all of the divisiveness and division that we see and the craziness we see inside the country that is not being lost upon our adversaries. So these are definitely interesting, challenging times, and I guess only time will tell. I think the U.S. is best when its back is against the wall, and I could see a period of time where our backs are definitely up against the wall, and I would like to hope we find a way to pull ourselves out, but it's going to have to be backed by something, because politicians will do what politicians have always done, and that is choose inflation over austerity. The U.S. will be no different.
Okay, and as we are wrapping up, I always ask you, okay, so these are a lot of big concepts. What does an investor do? And you've told us consistently you need to watch what the big money is doing, and what are they doing? They're buying gold. So maybe we can touch on that, but people are probably wondering, I think here, how much gold should I have? How do I actually do this?
I would work backwards from that, and I would say, what exposure do you want to a currency that's $155 trillion in debt? And move backwards. And, the U.S. came out with their balance sheet, 2022 balance sheet showed $5 trillion in assets, $155 trillion in liabilities. The biggest asset of the United States, over 35%, is student debt. So the land of the free, the home of the brave, the world reserve currency, you take student debt out of the equation, you have $3.5 trillion in assets backing $155 trillion in liabilities. We're an insolvent country. And I think that that's a bigger question. When you look at the central banks, they bought more gold over the last 18 months than in all of history. You see the exchanges on the London Metals Exchange and on the COMEX being bled dry by sophisticated money. It would be easier for you to send me a wire for $100 million than it would be for you to take possession off the LBMA or the COMEX of a commensurate amount. It would be much easier. Taking the big bars is challenging. You have to be sophisticated, and it's not easy or quick. And I think the people who are doing this, the sovereign wealth funds in particular, and the commercial and central banks, understand that, they can suppress the paper price and gobble up the physical, misdirecting the public when everyone is wondering why the price isn't going up. The bigger question should be, why are there 4 or 5 commercial banks that have massive short positions in gold and silver as the exchanges are being bled dry? They're using the suppression of the paper price, and in particular, the Eastern central banks are standing there. We don't care what you do with the price, we're going to take delivery. And this is happening all around the world. When you talk about the LBMA, London Bullion Metals Association, it's not just gold and silver. Silver, they have the lowest level they've had in the 140-year history of the exchange, but last year, 95% or so of the zinc disappeared off the LBMA and 70% of the aluminum. It's all of these metals, both rare earth and industrial and precious, that are disappearing because they're real. And like Zoltan Pozsar says, it's about commodities, Bretton Woods 3. And so I guess what I would simply say is the biggest, most sophisticated, well-funded, closest to the information money on the planet are draining the exchanges. Doesn't matter what the price is doing. In fact, they're using the counterintuitive suppression of the Western markets to run cover for their massive acquisition. So what do? I don't know where else you go besides into gold and silver, and I try to be objective. I don't know. Maybe farmland. You get out of debt, you pay yourself first, you get out of variable rate debt, because ultimately interest rates will rise in this country. That I do believe. There is no choice. How do you pay off just the unfunded liabilities of roughly $130 trillion? You can't. You're either going to inflate or you're going to default, or maybe you find a villain, the Xi Jinping and OPEC and Putin, to blame for what happens to the dollar. But I'll tell you, if all of a sudden OPEC ditches the dollar, overnight, things will massively change as all those dollars come home, creating hyperinflation and interest rates to the moon, collapsing traditional forms of investment. And you have to ask yourself, if gold and silver are so undervalued, then why is the biggest money in the world, or underappreciated, why is the biggest money in the world taking that opportunity when no one's looking to drain the biggest exchanges across the globe? And to me, that says they're front-running. And they are, just like all the big money does, they're using misdirection to run cover for it. So what do? You do what the biggest money in the world is doing. You mitigate your exposure to the dollar, you buy gold and silver, you get out of debt. And if you have the ability to buy farmland or agricultural ETFs or oil and gas stocks, or what Rick is talking about here, mining shares, Those are all better alternatives. And what that really says is instead of being broadly diversified, you try to decide what is the primary trend. For my money, the primary trend is of a falling dollar. And instead of being broadly diversified amongst a sampling of asset classes, in this case, that are all inversely correlated to a rise in rates, you broadly diversify within the primary trend. Precious metals, oil and gas, agricultural, whether it be ETFs, if that's your only ability to do it, or even real farmland, you broadly diversified outside the falling dollar. To me, that's what you do. And short of that, I have no idea where else to go if this plays out the way that it does. Being in traditional assets will be very dangerous. Another way of saying it would be if you're not a contrarian, I believe in that event, you're going to go broke.
Okay, and I think we'll wrap it up there. I think you've set us up well to understand what's happening next month with the BRICS meeting, how we can possibly prepare. Really nice to have you back. And
Appreciate it.
yeah, really good.
Thanks,
Thank you.
Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Andy Schectman with Miles Franklin. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.